Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, January 4th. It is 7 a.m. as I'm starting the video. And as always, if you're new here, run the video at like 1.25 or 1.5x. I think you'll really enjoy that speed. I don't think you'll miss a thing, and you'll get through the material quickly and have an opportunity to slow down. Take some notes if you see something important, something you want to trade, a key level, something like that. Taking a look at futures. We're off to a good start again this morning. Equities up 0.4, more or less across the board. Bitcoin's up 2%. The only thing I really saw down was copper, down about 0.75%. Over on macro, not a lot happening yet in the new year. We've got an ISM manufacturing print in the morning and really no earnings to speak of. The macro and the earnings will start to pick up again tomorrow and then kind of build into the new year. So off to a slow start. And just as a reminder, today concludes the triple official Santa's rally. And I don't know what the percentages will turn out to be. I'm sure every FinTwit and financial media outlet will be letting you know how much the Santa rally turned out to be, but it turned out to be pretty good, I think. So that's great. Also, I want to remind folks that January is the largest month by far for equity inflows. So from that standpoint, we've got a lot of fresh money coming in January, and I think that should be pretty supportive to the equity markets. I don't think we've got a Fed meeting in January. I take that back. I'll have to see when the next Fed meeting is. But we might be in a little window here in January where, Fed activity will be at a lull. So we kind of know they're going to start dialing back the liquidity, but we're not really going to, have that first crank until a little bit later on. So maybe we've got a window here with the inflows, good seasonality, lack of Fed, active tightening and talking, that maybe we can get a window here where we can get a burst of activity. And as you'll see in the video going forward, I've got some measured move targets from there's just some nice structures out there that we can look at, shoot at, benchmark against, stuff like that going forward. So let's get into it. I want to just revisit the U.S. dollar chart. We haven't looked at that in quite a while. I don't think we've got a ton of currency traders in the group, but be that as it may, the dollar ripples through everything that we do. It's said if you get the dollar right, everything else starts falling into place. And you can see we've been in a rising trend. A couple of consolidation ranges break out. Now we've had another consolidation range between 95.75 and 96.75. So we're right smack dab in the middle of that range. You can see we've got a rising 50-day. So you could set some alarms around those levels. And if you wanted to, you could jump over to a UUP. That's the ETF that tracks the dollar, more easily tradable. Of course, if you're into futures, you already know that you can, trade the dollar futures if you care to. But I think the most important thing right now for the majority of us is whether this dollar breaks out here and continues this upward trend, or somehow it loses the 50 and then starts coming back to earth. That'll impact a lot of things. And while I got you here, if you're new to the channel, welcome. If you look over in the show notes, you'll find a place to register for all my content. with a simple drop in of your email. And then here's some added color on the instruction set on how to get registered. It is a double opt-in, so a lot of people get that curveball of not finding the email confirmation of your registration. If you join the team, please look for that. And then with your okay, you'll be part of the team. And then I'll shoot you out an invitation to our trading room where we'd love to have you. So we had some activity yesterday on the 10-year yields. We saw a big spike. We went from around 1.5% all the way up to 1.63%, and you can see that is a more or less a upper end resistance level for rates. So in the days ahead, we're going to want to see if this resistance level contains rates or if we have a breakout. And remember that I believe the high for the cycle back in March was like 1.74%. So we're definitely in the higher end of the range. And so we're going to want to keep an eye on rates and, of course, an eye on rate-sensitive assets. I think the banks saw this as a very positive move yesterday. And just to comment on yesterday, I was pretty much off the desk all day. I was picking up my parents, and we got into some, not difficulty, but errands that they needed to run. The battery on their car went dead, so, taking them to the dealership and all that kind of stuff. So, long story short, I got back to the desk about 4 o'clock to see what happened. So, if you played your cards right yesterday, you're off to a blazing lead over me. So that's my challenge to start digging into that lead you've built yesterday. But remember, it's not how you start; it's how you finish. So keep that in mind. Good starts are great, but great finishes are better. So keep that in mind. Never become complacent with your wins. Always. Take each day as it comes and watch your risk and check out your opportunities and all that kind of good stuff. And I will certainly be there to help coach you along the way. And hopefully we can get some really sharp levels to look at and trade against and make some money. So here's TLT. If you've been watching along, we've been in this, we've had this well-defined range here between 146 and 151. We had a fake breakout. Then we've, as often happens, once you re-enter that old trading range, you go right to the bottom. And that's what we've done. And we've broken out down the bottom side. So now, whether you caught that yesterday or not, the objective trade, if you want to trade TLT, is to be short against the bottom of the box. And you've got the 200 here as well. And so the downside measured move is going to be $5 wide range from 146, puts you down to 141, testing these prior lows. So that, from a technical standpoint, all lines up. So if you were to get a little kickback rally today or in the days ahead that brought you back in to 146, bottom of the box against the 200, that would give you an even better entry point. And then if TLT popped over the 200, you just got to take it off. But if it doesn't, you got $5 of downside there as a target, and that would be a real nice risk reward setup. Moving on to the VIX, we had this bout of turbulence up here. And as often the case, when you get the spike above 30, they just cannot hold that. They ended up crushing it, and now we're down here in the mid-16s. Let's watch that in the days ahead, because if we get a rip and they, push volatility down into the 15s, that would be a good place to be ready for an increase in volatility, because as you can see, it just doesn't go, or at least in the last year or two, it just does not go below 15. So if we get a push down in the 15 range, we got to be on our toes and not fall asleep at the wheel, because then the odds favor some corrective activity and a rise in volatility. I wanted to show you the Mcclellan Oscillators because they've been a great tool for us to know when things are overextended and potentially going back the other way. And you can see here on the NYSE, we're sitting here right at 50. That has been a level just in the recent, since 2021, where we've started getting reversal points. Historically, it's more been up towards 60, as you can see on my charts. And I've even got, some rules here on what to do when things get overbought. Keep that in mind. It's an end of day measurement. You can't look at noon and find out, hey, what's NIMO doing? It's kind of an end of a day thing. Just know that we're at the upper end of the range and that we need to pay attention. I want to show you the corresponding oscillator on the NASDAQ here on the NAMO. And you can see that this was a great heads up down here in early December, actually right after Thanksgiving, when we bottomed out at minus 90. And we've made progress up towards the top. I can't say steady progress because we had some whipsaw activity that might have been a little bit frustrating. But we're sitting here at 37, not nearly as high on the scale as NIMO, but things can change fast. So just kind of know where we're at. I will keep you posted when I think we enter, more of a danger territory. So keep that in mind. Let's move on to SPY. Yesterday, the levels that we talked about worked out great. We had an opening high. Price came right back down to the bottom of our flag at 475, and that held yesterday morning. That would have provided you an excellent entry point to get long, and then it was a grind higher towards the finish of the day up towards this 478 level. And really what we want to see is a breakout here above 478.50, 479, get out of this bull flag look, and then take the next leg higher. Now here on the 30-minute chart, of course, we've just got the same information blown up. But what I've done here is given you the structure of what's happened over the past during this Santa rally. You can see that it started here on December 20th. We had an impulsive leg higher of $27. We've had a bull flag consolidation. And then so what I've done is take this $27 leg and then, moved it over to the flag. And, if we get a breakout from that flag, our measured move is going to be 502. And so I think if we were to get this breakout here, get into the mid 80s, mid 580s, I think there's a good chance. It's not an absolute chance, but a good chance of 500 or 5,000 on SPX acting like a magnet for, a fast run up to that 500 level. And then that would be a huge psychological level that, just as I'm thinking of it here, would probably be a place to sell. because that NIMO would be blown out. We'd have a lot of overbought readings if we made that move over, say, the next few weeks. But I mean, that's what it measures out to. And I mean, it's a beautiful, clean structure. You have to agree. Impulsive leg higher, tight consolidation. If we get a breakout, then I think things will be off to the races. Qs. Yesterday, our levels again worked out perfect. I've learned on FinTwit, you celebrate the things you get right, and then the things you get wrong, you just stay quiet about. I actually try to do it both ways. I'm not ashamed of saying when I got things wrong, but yesterday I got things right. So why not point it out? We had the opening gap higher. They sold that immediately, came right down to fill that gap. We had the 397, 398 area marked as support. That was your objective buy point. If you got that buy point anywhere close 398, you got a nice run up to 402 where things closed. So now today, we've re-entered this $4 range. So using our TA principles, our first objective is a tag of 404. We were in the range. We came out of the range for a measured move down. We've retraced and recaptured that level. So now the target is the far side of the box at 404. And you can see that RSI never lost 50. That's positive. And our PPO momentum is flattening out. And if you can use your imagination a little bit, it looks like it's turning up. So if we can get a good run today, we can get this PPO momentum to give us a bull cross, and then our indicators will be aligned with a move higher, supportive of a move higher. And of course, if we get that breakout above 404, then I think the all-time high was like 407, and then we can make our final assault on that and then break out into new sky territory. 30-minute chart, same deal. Just a little blow up here on the action. We had fallen back into this $20 trading range, which is never great, but it was a short-lived visit where we found support. We broke back above. So now again, we got to hold 400 going forward. It's okay. I mean, we got the dip below. Probably got some bears short. That's the technical thing to do when you break back into a range. Oh my God, this is it. Get short. That was short-lived. Turned out to be a bit of a bear trap. And now we're back above. So really want to break out above 404 today. IWM. There was actually a trade to make yesterday. Same kind of deal. We what was the low? 222.73. Yeah, we came down here on that first candle to fill, and then we made a run up into the gap, and that proved to be a fake breakout, and they came right back down, but closed the day near the bottom of the gap. That was kind of a cruel candle, if you will. Normally, when you get that move into a gap, you would expect that gap to hold, but that's why you get stops. You put your stops in. Once that broke into the gap, it should not have come back, and once it did, I mean, your trade might have lasted a half an hour or something like that. That's the way it goes sometimes, but honor that stop, because then you got a chance for a better entry back at 224. So you had to be pretty nimble yesterday on IWM if you were going to trade that, but the levels were there, and I can't guarantee price action, but I feel pretty good about the levels, and the levels gave you good guidance yesterday if you were involved in that trade. Facebook remains a little bit soggy. We had this nasty candle on Friday. They recovered that yesterday, but price really didn't go anywhere. I think today, on the upside, if you get a break above this 340.5 right here out of the channel, that would be a great or a solid place to try a long on the breakout of this little corrective action here on a breakout above 340.5, and then look for 344, 346, and then hopefully 354 back at the highs. What I wouldn't want to see is price come back down into this gap area and lose 334. That's where I would actually turn bearish on the chart if price were to drop down back below 334. Apple, our $3 trillion company. I don't know what happened to I had a bunch of annotations here. It looks like I lost them, but I'm going to go through and just tell you what they were. So yesterday had the level nailed for you. We had this obviously this base here at 177.50, and you can see the tiny candles where the bears lost power. The bulls had really not asserted themselves yet, but if you had taken a long here against 177, you were in the catbird seat, and actually in early morning trade you had a chance. What was the low? Low was 177.71, like right in here, I believe. Even if you didn't get that, you had a chance to buy at 179, and then you got the breakout to all-time highs. What I was going to show you is we've got the first leg of this move here, which was, let's see, referring back on my notes here, $13 move from 168 to 181. That's $13. If we take that first leg and extend it to a second leg, we get a measured move target of 190. So make a note of that number, and I will go back and put in these annotations, and I'll show you the next time around. But here on the breakout, the measured move target is 190. And so now if you had been long anywhere along the way, I would be taking some profits there at all-time highs and then stay long against 181 with a stop just below. And hey, even if you did not participate in all of this, my philosophy is all-time highs you got to buy. Everybody who's ever bought Apple is profitable right now. No natural sellers. You are, $1 away from the breakout. So just based on that, if you've got a target of 190 and you got, $1 of risk from 182 down to 181 with, say, a stop just below, you've got a 9-to-1 risk reward just for being, long against the all-time high with that measured move target of 190. So I think that's a good bet to take. Let's look at Tesla. It's up 13% yesterday. Congratulations to anybody that was long Tesla going in. We'll look at the 60-minute chart in a minute, but what I wanted to show you is we had this $200 range. We had a little fake breakout, came back in, as is often the case, back into the range, bottom of the box, top of the range rejected, bottom of the box, broke down, got almost that $200 measured move. We got 150, came back up. Once you re-enter the range again at 1,000, your measured move target is the top of the box. And we hit that yesterday, right at 11.99. So now here's the key. If we were to get a breakout above 1,200 and fill this little gap, our measured move target is going to be 1,400. Why? $200 range, breakout, add 200 to the breakout level for the $200 range gives you 1,400. So that would be the measured move target on that breakout if we do in fact get it. And here's a little different look at it. We've got a $200 leg of the first first leg of a bull flag. Then we got the bull flag, and then I added 220 onto this 1050 area, and that projects to 1270, and I would regard that as a T1. So I would put T1 at 1270, and I would put T2 at 1400, one off of the 60-minute chart, and then one off of the daily chart. And I think what you'd find is that, one, the daily chart signals are more powerful than a 60-minute signal. The higher the time frame, the more important the signal. I think that $200 range breakout will has a good chance of being fulfilled. But of course, to get to 1,400, you got to get past 1,300. So this bull flag measured move would take you up to 1,270, and then we'd have $130 to go up to that $1,400 measured move target off of the daily chart. Gaps to keep in mind: we've got a gap up to 1210. We're about halfway through that gap, and then we've got a large gap, unfilled gap below that we've got to keep an eye on. If things start falling apart and we come back down and enter this from above, then the chances are this would fill. But this really feels like a gap and go situation. It has started off that way with their incredible production numbers, blowing it out of the water. Elon is no longer selling anymore, which was a lot of this type of action. So I think Tesla is looking a lot better. And you can see on the indicators, they've turned up and are supporting higher prices. Microsoft was not the star of the show yesterday, down 0.5%, but there was certainly a nice trade to be had. Why? We talked about this level up here, and even if you did not get that first flush bar, that's fine. It came right down to this 330 level that we had marked on the chart. We said that was a high volume over price bar, that it would likely hold that area. It did. Gave you there were 2 touches of that level. So if you had gotten long against 330 or 329 and a half, you got a nice $4.50, $5 win on your hands. So now this morning, I would be using 334 as your pivot, and then your overhead targets are 336 and then 338. And then what you'd have is a impulsive first leg with a halfback move, halfback corrective move, and then hopefully what you'd see is, a re-acceleration to the upside. Something that would be really bearish is for price to roll over and then lose 330. That would be pretty darn bearish. So keep that in mind if there's something going on with Microsoft as far as corrective activity. You never want to see a prior low broken. So Amazon, another nice opportunity for a quick trade if you were focused on it, if you wanted to trade it. We had the levels for you. We said the bottom of the box, all these tests were support. You didn't get a perfect touch, but you got pretty darn close. You got down to 33.20. We had a box low of 33.15. If you had bought that spike low down here, you got a great entry point, and then you got the big rip move. And even if you didn't, if you were below this 33.40 on the recapture of a known level from below, that's typically a place to buy. So if you bought at 33.40, then you got a $60 move in a heartbeat, and that's a great way to start off the year. So if you got that, congratulations. Today we're in the middle of the range. I don't think the trades are going to be quite as simple right off the bat. What you're really looking for here is a breakout above 34.40. I would definitely be a buyer there. Then we've got a $120 trading range from 34.40 down to 33.20. That's 120 bucks. So you add 120 on the 34.40, you got 35.60, which would put you up in here. And then I think you would go ahead and find the top of the box at 3,600. Maybe not today, maybe tomorrow, whenever, but then that would be my target. And then if you get that move, you can move your stops up all along the way at the levels that we've shown. Actually, even Google gave you a little opportunity. Had to be quick on that first bar. We came down and tagged 28.70, which was a good line of support. Why? Because you had this line right across here. You had the large value range with the large volume over price bars. Good place for that to hold. If you bought that, then you got a nice bump up. If you're not in it now, I think your pivot is 28.95. I think you can stay long against that. A possibly more conservative approach would be wait for the channel breakout at 29.15. Have price come up here, break out, and then your target would be 29.40 and then 29.65 on the way back up. I really like that trade. If you were to get a breakout here at 29.15, I really like the idea of buying that. Netflix, not a lot going on. We lost this flag look. We came down, then it had a little kickback into 597.50. I think there's probably better places to hunt for a trade. right about the time I say that, it does a moonshot. I mean, you can have whatever levels that you're interested in trading that. From this point here, I would have the lows alarmed at 585. You know, if you got an alarm on that down here at the bottom, the objective trade is to assume that bottom holds, and then you can get long at a really good objective price level and then look for a bounce. Or if you get a breakout back above 605, then your target would be 617.50, and then a breakout here that we've talked about above 617.50, then you can look towards 630 and 645 as the resistance starts to fall away. And then wrapping up with SMH. We had a gap and go yesterday. We were down here towards 308.50. We got a gap up. I will put that gap in there on future charts. But your buy point yesterday was either on the first candle of the day, breaking this corrective flag activity, or you could have bought at 312.50. Either way, would have been a nice trade. So today, you're looking for a breakout above 316 to blue sky. And what I did here, like I talked about on the other charts, is kind of give you an idea of a measured move target. Now, we had 335 as a measured move target off of the daily chart that I brought over to this side. But what I wanted to show you is the alignment between the daily chart and the 60-minute chart. We had a $28 first leg from 288 to 316. It's 28 bucks. Then we had the bull flag. And then what I did was add on $28 for the second leg, 28 onto 308 at the bottom of the flag, gives you 336. So measured move target out of this bull flag look is 336, and we had already had a pre-existing measured move target of 335 off of the daily chart. Beautiful alignment. What would be the trigger for that? That would be a breakout above 316. So if you had been long, all of this, and you suffered through this, and now you got the breakout, I would be buying some more time. I would be recalibrating against 316. Once you break out, we had the fake breakout, we had the corrective activity, and if we were to break out again, no reason for price to come back below 316 again, with all this being support and being in blue sky. I would be looking for that move up to 335 over time, not instantaneously, but that's what I would be looking for. And any move back below 316 would have me having a few doubts on a technical basis, especially on a close below 336. A close below 316 on the days going forward, if and when we do break out. So that would be a great place to locate. To have your stops just below 316. That would be the objective trade to stay long there. So, okay, last day of the Sanders rally. Let's hope for finishing that up with a bang today. Keep in mind our oscillators are pushing to the high side and our VIX is pushing to the low side. Not in danger territory now, but I would say yellow flag kind of caution. I will keep you posted on that. I think we've got some really nice structures to work with going forward, especially if we can get these breakouts. And don't forget the equity inflows in January, best month of the year by far. So hopefully that'll be supportive of higher prices. If you're new to the channel, thank you so much. I told you about the link in the show notes to register for all my content. Please hit the subscribe button and the thumbs up and the alarm notifications. You'll get notified of all my content. And then morning, noon, or night, whenever I send new stuff out, you'll get it right in your email box. And if you've got a friend in your network, in your trading circle, please pass the link along. Help me grow the channel. I really, really appreciate it. So this has been Chris Buss with Traders Profit Compass. Talk to you next time.